Physical gold is a great addition to any solid, sustainable, well-diversified investment portfolio. I go deeper into designing your investment portfolio in Invest Like an Egyptian and some other videos that are available. I'll share the links in the description below. But there are various ways you can hold physical gold. So the key thing here is one, you only want a small percentage of your portfolio ever in gold. But gold is useful because it tends to act like an insurance in a portfolio. It zigs when other things zags. And so how best to hold it? Now you could go and get physical gold bullion bars, but they're a pain. Do you bury them? How do you protect them, lug them around? And so they're great ways for you to invest and have physical gold in your portfolio without actually holding the bar. And the traditional way, well, let's say the way for the last 20, 30 years to do this very cost effectively has been through an exchange traded fund. So you have these ETFs that there's a fund that owns physical gold that is held in a vault somewhere in Switzerland or London and so on. And you get to own shares in that fund that owns that physical gold. So these are called physical gold ETFs. Now, more recently, with the tokenization of real world assets, yes, we're talking the world of crypto, we are able to now own and hold physical gold in the form of a digital token. So the most well-known one of these is something called PAX Gold, so PAXG. And PAX Gold is a digital token. It's on the ERC20 network, issued on the Ethereum blockchain, and it's issued by Paxo Trust Company. And this is a US regulated financial institution. And one PAXG token is equal to one fine troy ounce of gold. And it meets the London Bullion Market Association gold delivery standard. Now, physical gold is stored in secure vaults in London for this particular fund, you could call it, and each token holder has legal ownership of a specific allocated gold bars identified by serial number. So literally there's this digital token of a physical real world asset. And then your PAXG tokens can be traded globally on crypto exchanges, transferred peer-to-peer, or even redeemed for physical gold if you really want to, if that's subject to minimum redemption amounts. And there are Paxo also publishes monthly third-party audits to verify the amount of gold in their custody and that it matches the tokens in circulation. So that's what PAX Gold is, in tokenization of a real-world asset. Now, a physical gold ETF is this fund, and it's a security that then shares in this fund that holds that physical gold are traded on a stock exchange, hence an exchange traded fund. And so the value of the fund is backed by a physical gold bullion that's also stored in security vaults. So the difference slightly is you own shares in a fund that holds a physical gold versus PAX. It's a tokenization of an actual specific gold bar that you have. So the physical gold in the form of a physical gold ETF is also held in safe custody, for example, of the SPDR Gold Shares, Physical Gold ETF, GLD, which is one of the biggest. Its physical gold, the custodian of that is HSBC. Now, generally, you can't go and exchange your ETF shares for physical gold. Instead, if you want to realize that value, you would sell your shares on the exchange, just like you would sell any other index tracker held in an ETF. And these are also regulated financial products, and they're traded through your standard brokerage account. So you might consider, well, is PAX Gold safe? Well, it is backed by physical gold and it is stored in secure insured vaults. It's regulated by the New York State Department of Financial Services. It's audited monthly. You can have direct ownership of that physical gold bar. But of course, like many of these investments, there are some risks. There's a counterparty risk. So you depend on Paxo to safeguard that gold and maintain that operational integrity and not, do something silly with it. Digital assets in themselves are a risk because you are responsible for holding your keys, your crypto wallet, your private keys, and ensure that you aren't hacked or you lose that property. like any other crypto, you're responsible for that safekeeping. There's also regulatory uncertainty. With all crypto assets, PAXG could be affected by changes in cryptocurrency regulations, the latest trend, whatever's happening with the governments, and so on. And there could be liquidity issues because liquidity just means, is there a willing buyer when you want to sell, or vice versa? It on big exchanges, on your big markets, with your big exchange traded funds, there's a lot more people buying and selling. And the crypto market depends on the exchanges and how many people are buying and selling at any moment. So really, I've provided a comparative list in terms of minimum holdings, the pros and cons to each in a linked blog that goes with this video, so you can go in and go deeper into this. But essentially, the key considerations when choosing between PAX Gold and Physical Gold ETF, when you're choosing to bring physical gold into your broader investment portfolio, really comes down to a few key points. One is market access and trading hours. Now, because of cryptos, the crypto exchanges are available 24/7. That's when they're linking. So trading and market access is anything on a crypto network is going to be superior. So PAX Gold is going to have more accessibility there. But with ETFs, you're going to trade on traditional markets, normal market trading hours. And so then it comes to ownership structures. With PAX Gold, you are directly allocated ownership of a specific part of that physical gold, whereas with an ETF, you own share in the overall holding. So there's no direct title to any specific gold. It's in that fund, whether these things are important to you or not. Now, both are through a third party. So for me, no big difference. And again, I don't particularly want to be trading my gold at 2 a.m. So those market hours doesn't make a difference to me. Now, the next one becomes integration within your portfolio. Now, if you own a physical gold ETF, it's just easy to do in your traditional brokerage account. So it might be a discretionary account, might be a tax-deferred retirement account of sorts. It might be some sort of tax-free account that you hold that in. But you can just put your investments into your physical gold ETF while you're doing your other broad market index trackers, maybe a real estate investment trust. So it keeps it all in one place. On the other hand, you could decide to integrate your PAX Gold with your other crypto holdings that you have. So in your investment pyramid, which we refer to, there's a link below to the Invest Like an Egyptian video which talks about portfolio design. You might say, great, you'll add your physical gold with your other tokenized investments in that portfolio. So it's just deciding where you're going to sit and have those. If you're not going to have other cryptos, then it would be silly to go through the PAXG, keep it simple, and just keep it in your gold ETF. Now, from liquidity and redemption, that's just how easy it is to buy and sell. PAXG is very flexible for redemption. If you want to redeem it into physical gold, again, you're going to have to sort of go and get that, and there's complexity around that. Whereas ETFs, it's just a real quick conversion. You'll have to convert back into fiat currency, whatever the currency is of your brokerage account, euros, pounds, dollars, wherever it sits. Now, another consideration is regulatory preferences. Now, ETFs are just well-established securities regulations around the world. There's also some protections on those. In some countries, you also get insurances around up to a certain level of your holdings. Whereas if you're comfortable with crypto regulations, blockchain-based custody, if you like that decentralized way of holding your assets, then you could go with PAXG. Then the final one to really consider is cost comparison. Now, because it's tokenized assets, your fees for PAX Gold holding are actually really low. It's about 0.24% are annual custody fees, and then there's some blockchain gas fees, so that's when you actually do the trade. Whereas your fees for your ETF, there's an ongoing total expense ratio, so those might be between 2.5 and 0.4, and then you've got your exchange, your brokerage fees. So not substantially different, but depending on your exchange, you might find the crypto, the tokenized asset version, slightly at a slight discount, depending on how it holds that. So really, whether you decide to go a PAX Gold or a Physical Gold ETF, it's first deciding how much are you going to hold physical gold in your portfolio, that diversified portfolio. If so, you then decide which way to do it. For those who are comfortable with tokenized assets, with the crypto world, who are already active in crypto markets, who understand custodianship of their wallets, they like the digital flexibility, they like the philosophy of decentralized networks and the whole crypto world, then go PAX Gold. If you're comfortable and just getting going with your traditional investor in your brokerage account, you like the value of regulated securities and just straightforward interaction with your brokerage account, then go with that. So really it comes down to your preferences and how comfortable you are with different methodologies, because essentially they're both very much the same. Both hold physical gold, very similar costs, and those are the decisions you're going to come to. So hopefully that's been helpful in helping you decide how best to add some physical gold into your well-diversified portfolio.